Coming up on the show today, Johnson & Johnson vaccine study to resume in South Africa on Wednesday. Ghana's producer price inflation for March rises to 13%. And Kenya's trade deficit widens on fuel and manufactured goods imports. Hello and welcome to Business Incorporated. I'm Amy John Mekwa. Well, we'll begin this week's show with market numbers from the African continent, which were mixed. South Africa's JSE rose 0.10%, while Nigeria's main index ended Friday's session positive by 0.43%. Elsewhere, the EGX30 in Egypt shaved off almost 1% at intraday, while the market in Kenya ended negative on Friday. In the Gulf region, investor sentiments were positive across markets. We follow markets in the UAE rose the most. Dubai's index advanced 0.73%, while the Abu Dhabi index gained 0.48%. The Qatari index was higher by 0.42%, while Saudi Arabia's market ended 0.0%. And in Europe, stocks were muted this morning as investors gear up for a busy week on the data and earnings front. Well, let's get updates from the European scene with Conrad Bussen, who is here with us. Hello, Conrad. Welcome to the show today.
Good afternoon. Thanks for having me back on Channels TV. It's a joy and an honor.
Well, it's great to have you back, Conrad. Well, Germany's business sentiment is up, according to the research institute IFO, which has the IFO index been doing. And how is it impacting Germany's stats?
Well, the impact on the German market, on the German DAX, our share index, is, I would say, it is support for this market. Let's not forget it has been trading on or near record level for 10 days or so. And on this level, everyone is focused on, keeping this high level and not losing too much ground. This is what we can see right behind me. It's a shaky trading day here in Frankfurt, but still one that, doesn't let the German index drop deeply into negative, and that's already positive. Let me just recapitulate, let me just repeat what the IFO index reading has been. 96.6% was the reading last month. This has increased to 96.8, so a slightly better business sentiment here in Germany.
And startup companies in Germany have collected more money than ever. The likes of Grover, Ter Mobility and Lilium are also among a group of European startups that got a lot of funding. Tell us more about that.
Yes, European startups have been getting a lot more money last year than the year before. The increase in deals is up 58%. The volume is up to 36.5 billion euros. That's an increase of 17% in volume, in financial volume. Lots of companies getting fresh money here, many of them in the United Kingdom, also in other places of Europe, for example, in Italy, where the biggest deal happened with nearly €500 billion in funding for the company Telepass Group. Here in Germany, Grover being a large package sender where you order electric devices, you order machines, small machines, stuff like this, then you get it delivered. That's Grover's business model. It's been running quite well, I should say. Also Ter Mobility, which is one of those operators of those little electric scooters. I don't know whether you have them in Lagos. We have a lot of them here in Frankfurt, Berlin, Munich, Hamburg, Cologne. You can rent them, and then you go in the street with this electric scooter. And then last but not least, Lilium, the maker of electric helicopters.
Well, worldwide shortage of computer chips is causing headaches in more and more countries, including car makers in Germany. How long are they planning with reduced capacities?
At least until the end of this year, because this is what Cisco says. Overnight they came out with a statement saying that they reckon that computer chips will be short on the world market for computer chips at least 6 months. Others, Intel, for example, and TSCM from Taiwan, the large Taiwanese chip maker, they both said that the problem will last into the year 2020. So at least till 2020, the beginning, companies have to deal with slower deliveries, lower deliveries, less deliveries of computer chips. It's all those electronic companies that, order everything away, and that I could hear also pay a little better than the German car makers.
All right, Conrad, thank you so much for the update. Do enjoy the rest of your day.
Thank you.
Well, we'll cross over now to London, where Juliana is waiting to give us updates from the UK. Hello, Juliana. Welcome this afternoon.
Good afternoon, Innie, once again.
Yeah. Well, in the morning, we talked about the expectation that the UK economy will grow at the fastest rate since Second World War. How are the markets reacting to this data?
Well, unfortunately, not much. It hasn't really been picked up. I suppose this has been priced in by investors, although we had a positive outlook for the EY item club. It pretty much is in line with what we've heard from the IMF, the OECD and the British government's own budget for office responsibility and the Bank of England. As soon as these lockdown restrictions are lifted fully, there's billions of pounds in pent-up consumer demand that will be flourished on the economy. So we are expecting there to be a sharp uptick when we get to the second, third and fourth quarter. The FTSE All-Share started off pretty damp, and it's still damp at intraday. Some of the big risers on the FTSE are aero-related stock. Hopefully, come May the 17th, we'll all be flying across the continent and beyond again, which is why investors are pretty happy with those stocks. The FTSE All-Share is up 0.04%. The FTSE 100 is down by 0.03%, and the FTSE 250 up by 0.37%. In the currencies market, the British pound is up on the US dollar by 0.22%, up on the euro by 0.21%, and up on the Japanese yen by 0.09% at intraday.
So Tate & Lyle is seeking to focus on its smaller food and beverages division, which made annual revenues of £942 million, and they're in talks to sell the sweeteners division in a switch to healthier food. Why is this coming at this time?
Yeah, it's an interesting story. Tate & Lyle, obviously one of Britain's most popular brands. They've been going for about 162 years, and they currently trade on the FTSE 250. As soon as this announcement was confirmed by bosses today, their shares rose by about 6%. The story was first reported yesterday in the Sunday Telegraph that now bosses are trying to transition to be a kind of cleaner, more healthier looking company. Tate & Lyle, most notably known for its sugar business, which it sold in 2010. But now they want to focus on the food and beverage part of their company. As you said, it made over £900 million in the year, in the most financial year. But the bulk of their revenue thus far does come from its sweeteners division, which is particularly profitable in North America. They can see that the world, particularly in the West, is transitioning into a more healthier lifestyle. They want to grab onto that. They believe that it's going to be more profitable and more sustainable in the long run. According to the statement that they released this morning, talks are still very much in the early stages. However, I did read in the Financial Times that the two companies that are bidding for this division are Apollo Global Management and Cerberus. They're both very profitable US hedge funds. So, yes, it's all in the early stages, but it would be a massive transition for, as I said, one of Britain's most popular brands.
All right, we'll wait and see how the talks end. Well, Prime Minister Boris Johnson is facing questions over how expensive renovations at his Downing Street flat were paid for. Labour has called for a full inquiry into the issue. What's the row about?
Well, this is a major story. Prime Minister Boris Johnson is pretty much engulfed in a Downing Street civil war. And unfortunately for the Prime Minister, this is much more than Carrie Simons, his fiance's decision to renovate the flat above number 10, which is where he lives, costing hundreds of thousands of pounds. Let's put that aside because that story has been running for weeks and weeks and weeks. And yes, the Labour Party are asking for official information to show just how it was paid for. There are some suggestions that big Tory donors could have put their hands in their pocket to shelve out some money for some pretty wallpaper. But the main issue, the big story that everybody's talking about in London today is a story that was reported by the Daily Mail. The Daily Mail, I've got to say, very popular across the world, well, the Mail Online is. It has been pretty favourable to the Prime Minister over the past year. So the shock headline was that Boris Johnson, during a meeting in October, said, and I quote, "No more expletive lockdowns. Let the bodies pile high in their thousands." Now, this is what apparently Boris Johnson has said in a meeting during October when we were going through our second wave and there were fears that we would have to lock down the economy again. It's important to say that Downing Street have refuted this claim to the highest. Sir Keir Starmer, the Labour opposition leader, has asked Boris Johnson to make a public statement. I did see about an hour ago he made a statement during a visit to a plant in Wales. But of course, this is an absolutely humongous story, considering just how bad we've coped with COVID, especially in the first stage of COVID in this country, and the fact that over 100,000 people lost their lives. Boris Johnson, the Prime Minister, is known to have a loose tongue, and he has apologised for several things in the past. If indeed there is an audio recording of him saying this, then of course his position is completely untenable. This again, Innie, very quickly, just to give it some context, comes at a time as well when he is in a massive war with Dominic Cummings, his former chief advisor, somebody who, you know, people said got him over the line to get into number 10 and get that overwhelming thumping majority. He was ousted out of government and Downing Street last year. He's wrote a scathing 1,000-word blog telling everybody that Boris Johnson is basically incompetent and lacks integrity. So yes, the infighting in Downing Street continues.
Obviously continues. I'm sure a whole lot more is going to come out of Downing Street on this issue as well. Thank you so much, Juliana, for always being there and bringing us up to speed with happenings in the UK.
Thank you.
So now we move to Asia, where shares in major Asia-Pacific markets were mixed today as investors continue to watch the COVID situation in India. The Nikkei 225 in Japan gained 0.36% to close at 29,126.23, while the Topix index rose 0.17% to finish the trading day at 1,918.15. South Korea's Kospi advanced 0.99% to close at 3,217.53, while Hong Kong's Hang Seng Index slid about 0.4% as of its final hour of trading. Mainland Chinese stocks closed lower, with the Shanghai Composite down 0.95% to 3,441.17, and the Shenzhen Component slipping 0.888% to 14,224.45. Over in Australia, the S&P AX 200 closed 0.21% lower at 7,045.60. MCSI's broadest index of Asia-Pacific shares outside Japan gained 0.48%. And on Wall Street, futures contracts tied to the major U.S. stock indexes held steady in early morning trading as investors braced for one of the busiest weeks of the first quarter earnings season. Contracts linked to the Dow Jones gained 46 points, while S&P 500 and Nasdaq futures hovered below the flat line. Investors are due for a busy week ahead between a Federal Reserve meeting, the debut of President Joe Biden's American Families Plan, more inflation data, and ongoing corporate earnings report. The week is a major one for corporate earnings, with about a third of S&P 500 set to update investors on how their businesses fared during the 3 months ended March the 31st. Well, we'll take a break now. When we come back, more stories from the African continent. You're welcome back. Last week, Chad's President Idris Deby died of his injuries following clashes with rebels in the northern part of the country. Well, we'll turn our focus on what his passing tells us about the current security situation in the Sahel countries and what the business and security outlook is in that region. Well, to talk to us about this is Matt Kindigan, Associate Practice Lead for Sub-Saharan Africa at Fronterview. Good afternoon, Matt, and thank you so much for joining us.
Good afternoon. Thank you for having me on the show today.
Yeah, so why is the death of Idris Deby significant, and what does it tell us about the region's security landscape?
Mr. Deby's death is really quite, I would say it's a sudden and very uncomfortable reminder of the fragility of the security landscape in Chad and the broader Sahel region. So I would emphasize that Mr. Deby's death does not represent an immediate intensification of insecurity in the region, but it does suggest that the issue is pretty chronic and it's not going away, and if anything, it may be intensifying. It also raises some questions about what comes after Mr. Deby's rule in Chad. So under his leadership, he's been a relatively effective military force in countering the activity of insurgents. He's been quite a trusted partner internationally in terms of security, and he's also been in power for several decades. And so there's a lot of uncertainty around what comes after him in terms of leadership, especially if the military in Chad takes greater political control of the country over the coming months.
So which of the countries in the Sahel are most vulnerable to insecurity, and how will this affect economic growth in the region?
Unfortunately, most countries that straddle the Sahel are quite vulnerable to insecurity, but there are two distinct sort of theaters of insecurity, you could say. One is in the east around Lake Chad, where Mr. Deby was killed. That also affects the far north of Cameroon and northeast Nigeria. And in the west, Mali, Burkina Faso, and Niger are quite badly affected by quite an extensive area of insecurity. But I would say they're quite different in terms of their impact on economic growth. Insecurity in the west of the Sahel has a much bigger impact on the economic prospects of those countries, whereas in the east, especially Nigeria, Cameroon, although insecurity in the Sahelian parts of those countries is quite considerable, they really don't. These security challenges don't represent a significant risk to the economic growth outlook for these countries, and this is because the fundamental drivers of growth, so manufacturing development, commodity exports, services sector activity, are only indirectly affected by insecurity in these countries.
So does that mean that businesses should not be so worried about insecurity in the Sahel?
So that's correct. We would say, and the thing that we advise our clients, we say, although it grabs headlines, it is something to monitor and to watch out for. Most businesses should not be concerned about the effects of insecurity in the Sahel on operations, especially if their businesses are focused in major urban areas. And this is because most security challenges are focused in rural areas. And so, companies operating in the big cities are not going to be directly affected. There are a couple of industries that will be affected by insecurity. So companies in logistics and distribution, certainly travel and transport in rural areas is becoming riskier. And this also means that companies that are exposed to the agriculture industry across the region do have some increased risk as a result of insecurity in the Sahel. But as we said, by and large, most businesses across the region will not be directly affected for the foreseeable future.
All right. Thank you so much, Matt, for bringing us up to date on the economy of Chad. We appreciate it. Enjoy the rest of your day.
Thanks very much.
Well, moving on now. South Africa's health ministry says a research study in the country further evaluating Johnson & Johnson's COVID-19 vaccine in the field will resume on Wednesday after the study was paused over rare cases of blood clots in people given the vaccine. During the pause, it had been established that there's a 1 in a million chance of getting a clot after the vaccine, so regulators across the world have recommended the continued use of J&J is short. According to the ministry, it is working with local regulators and the South African Medical Research Council to ensure there's intensified pre-vaccination assessment and post-vaccination monitoring where the J&J study resumes. Moving to Ghana now, data from the Statistical Service shows that the average price of goods and services received by domestic producers in the country for their production activities in the month of March went up by 13% year-on-year, the highest in the past 12 months. The Statistics Office attributes the increase to a rise in the inflation rate in the manufacturing subsector. The mining and quarrying subsector recorded the highest year-on-year producer price inflation rate of 22.7%, followed by the manufacturing subsector with 14%. The utility subsector recorded the lowest year-on-year producer inflation rate of 0.4%. However, on a monthly basis, the manufacturing subsector recorded the highest inflation rate of 0.7%, followed by utility subsectors with 0.0%. Latest figures from the Central Bank of Kenya shows that the country's trade deficit widened by 13.49% in the first 2 months of the year, largely on increased expenditure on manufactured materials and fuel imports. The trade deficit increased to 198.64 billion shillings from 175.03 billion shillings a year ago, amid reduced disruptions in global supply chains and increased costs of shipping in fuel. The trade data shows imports were largely lifted by increased expenditure on shipping in manufactured materials and chemicals, while earnings from exports were driven by horticultural sales. Kenya has struggled to diversify its exports away from traditional tea, horticulture, and coffee, which are largely sold raw, exposing its farmers to price shocks in international commodity markets. Well, we'll go to the oil market now. Oil prices fell in early trade today on fears that surging COVID-19 cases in India would drive down fuel demand in the world's third biggest oil importer, and as investors adjusted positions ahead of a planned increase in OPEC Plus oil outputs from May. Brent crude futures dropped 0.6% to $65.73 a barrel, while West Texas Intermediate crude futures were down 0.5% at $61.83 a barrel after rising 1.2% on Friday. Both benchmark crudes fell about 1% last week. OPEC Plus will hold a largely technical meeting this week, with major changes to policy unlikely. And that's it on Business Incorporated today. Thank you so much for watching. I'm Ini John Mekwa.